Akhil Mittal of Tata Mutual Fund joins us. Akhil, mutual funds, especially fixed income fund managers, had a tough time over the last few weeks. The RBI also very clearly is focusing on financial stability and liquidity. Are you happy with the measures announced by RBI? It looks like no action is good action.
Uh, I guess a little bit of more clarity in terms of what RBI is thinking about or what actions they are contemplating would have been more helpful. But we have fallen short of that also to the extent what was mentioned by the governor, saying that, both the governor and the deputy governor, that they should rely more on NBFCs, should rely more on the equity capital and long-term funding. I mean, that's kind of a known theoretical subject. Market would have liked a little bit of more clarity, a little bit of more in terms of what minute actions they are planning, but we haven't got that so far. So I guess we'll have to wait for some more time for RBI to come out with a clearer, if any, path that they want to follow as far as financial markets or NBFCs or HFCs is concerned. On the monetary policy front, it looks like a little bit of surprise, given that, a larger belief is monetary policy is not only inflation but also financial stability. But I guess governor and the committee has made it pretty clear that they are looking purely from the legislative target of inflation. So currency or other financial stability measures probably do not count that much of weight in the monetary policy as of now. Looks like we have postponed a bit of issues, but currency was expected to take a knock in such kind of a scenario, which it has. So I guess, as other panelists have also said, that going ahead we need to watch out November, December very closely. So that's where the belief is as of now.
Right. My next question, Akhil, is do you think the mutual fund industry, especially the debt side, they need a special window from RBI, or do you think that the liquidity is improving, as SBI's MD told us that they are good with liquidity?
As of now, I can speak for as of now, looks like we are managing. It's not that we need the liquidity window immediately. But given the kind of virtual freeze or let's say a very, very low appetite in terms of finance papers for NBFCs or HFCs, in any case of a market sell-off or a huge redemption in the markets, it is difficult to sell those kinds of paper today. So in that kind of a scenario, if we are looking at, then yes, might be the need of a RBI liquidity window for mutual funds. As of now, we are scattering through. So it's more of a wait and watch game. I think in case we reach there, is yet to be seen. But as of now, we are comfortable.
Right. As of now, you are comfortable. Let me take this one last question with Anand Tandon. Anand, how do you think the markets will react on Monday? If you assume that today they have overreacted, the panic is a little excessive, do you think some kind of calm will come back to the markets on Monday, or do you think that there will be some more spillover sales?
Well, I mean, I don't think there may be any spillover from the domestic policy changes. However, if there is something that happens in the global markets, of course, all bets are off. You may find a bit of a bounce up, but I would assume that, given the current state of the market, any bounces will be sold into.
Right. Any bounces will be sold into on Monday. That really strikes a very important note of caution coming from a market expert. Shubhata, my last question, I'm coming to you on this particular issue. Somewhere the governor also said the excise duty cut and the promise to keep the fiscal deficit under control, we should take it at face value at this point in time. Your comments on that statement?
Yeah, I think it's going to be imperative to keep fisc under control because, as I said, while direct taxes are tracking well, indirect taxes, particularly GST, hopefully should get better in the second half. The other non-tax revenue items need to be closely monitored. In the current equity market conditions, we need to see how disinvestment process is completed to achieve the budget target. Fisc risks is something that we would be watching out for. Concur with the governor that there are risks on the horizon, and that is why I come back to my last point of the monetarist policy statement that was stated that there are substantial risks to growth and inflation through fisc slippage risks, through oil and rupee impact, etc. I think going forward, having growth back on track at least will address some of these risks in terms of getting the tax revenues in place and minimizing the fiscal slippage risks and so on. So overall, broadly concur with the statement made earlier by the central bank. As I said, the somewhat calmness should return in the markets once you digest all the policy pronouncements that have been made more carefully, and we also need to look at market moves in terms of the FPI relaxation that seems to have been accorded by the central bank today. I think today has been more of a disappointed with the call because there was a near unanimity on a rate hike call which did not get delivered. I think Monday would be the day to look at the markets more calmly and probably take cues from there. As far as macros are concerned, inflation seems relatively on a benign scale, risks on the upside, but the prints are currently on a benign scale. Growth is something that you need to push the momentum for. That in turn could help some bit of attractiveness in earnings growth as well as therefore some dollar capital coming into the country.
Right. Absolutely. On that note, I think we need to conclude this long conversation of the RBI, the not so actionable kind of a policy, very calm and calibrated move from the RBI governor. Let me thank all our guests who joined us and took us through this very interesting and one of the toughest monetary policy circumstances that we are meeting. Calm has to return to the market on Monday. Hopefully markets will bounce back, but one view is that every rally will be sold into, and with that, it's a wrap on this special edition, special coverage of the credit policy. Stay tuned to BTVI for more news and updates coming up on the other side of the break.